Berkshire Hathaway offloads Apple stock as Warren Buffett prepares for capital gains tax hike. Berkshire Hathaway is on track to hit a record high cash reserve of $325.2 billion, signaling a strategic shift under Warren Buffett's leadership, which includes selling off a significant portion of the company's Apple stock. The move comes as Buffett prepares for what he predicts could be a rise in capital gains taxes, potentially impacting future returns from investments. Buffett's strategic exit from Apple. Buffett and his team at Berkshire Hathaway have been trimming their position in Apple, which has long been one of their most profitable investments. In 2016, Berkshire began building its stake in Apple, eventually making it the company's largest holding. At its peak, Apple made up $178 billion of Berkshire's portfolio. But as of the third quarter of 2024, that figure had dropped to $69.9 billion, with the company selling more than two-thirds of its Apple shares in just over a year. By the end of the second quarter in 2024, Berkshire had already halved its Apple stake, and by the third quarter, it sold an additional 100 million shares, bringing its total to 300 million. Down from 400 million shares previously held. Despite the significant reduction, Apple remains Berkshire's top holding. But the rapid selling reflects a broader trend of Buffett scaling back on equity investments across the board. A record-breaking cash pile. The massive selling of Apple stock has contributed to Berkshire Hathaway's cash reserves, which surged to a record high of $325.2 billion. By comparison, Berkshire's equity holdings at the end of the third quarter were valued at $271.6 billion. Showing that the cash pile now exceeds the market value of the company's equity investments. Buffett's team has been cautious about deploying capital into new investments, making just $1.5 billion in stock purchases in the third quarter of 2024. This marks the 8th consecutive quarter in which Berkshire has been a net seller of equities. Despite these moves, the company's stock price has continued to perform well, increasing 52% over the past 3 years. Outpacing the S&P 500's 22% gain during the same period. Buffett's tax predictions. One of the key drivers behind Berkshire Hathaway's stock sales and growing cash reserves is Buffett's belief that capital gains taxes are likely to rise. The billionaire investor has repeatedly pointed to rising U.S. fiscal deficits and the possibility of tax increases as part of the government's effort to address the nation's financial challenges. At the 2024 annual shareholder meeting, Buffett remarked that higher taxes are, quite likely, in the near future. His concern is that capital gains taxes, which are currently taxed at a lower rate than ordinary income, could rise as part of efforts to reduce the federal deficit, which, as of 2023, stood at about 122% of the U.S. GDP. Vice President Kamala Harris has previously advocated for raising the corporate tax rate from 21% to 28% if she were to be elected president, while former President Donald Trump has promised to cut the corporate tax rate to 15% for U.S.-based manufacturers. Buffett's approach, therefore, is to be cautious about capital gains taxes potentially increasing in the coming years and to preserve cash for more strategic investment opportunities. Looking ahead, while Buffett has maintained that Apple will remain one of Berkshire Hathaway's largest investments, his preference for holding more cash reflects a desire to stay flexible in an unpredictable economic environment. With tax policy changes potentially on the horizon and global uncertainties continuing to shape markets, Buffett's moves suggest a cautious and pragmatic approach to managing Berkshire Hathaway's massive portfolio. The decision to build cash reserves and reduce exposure to equity holdings also underscores Buffett's long-term strategy of protecting the company's value while positioning it for future opportunities. As we head into 2025, it will be interesting to see how these moves play out and if the anticipated tax changes come to fruition.